due to life of a financial analyst, solo financial analyst with personal interest. Since I'm not working for any business, I'm just doing my solo financial interest. So I'm speaking mainly on the side of investments and stocks mainly. For other instruments, I usually do in my brokerage app and just leave that. So on stocks, I just usually open my day starts. I just open this Finviz. It's a stock screener, many stock screeners out there, but this is the one I use. So I just open this and then come just look at the markets, the S&P 500, Nasdaq, and the Dow Jones average, and then I usually don't spend time here or even check on the gainers or the losers of the day. I just usually just come to the stock screener. So from the stock screener, there are very many limitations. I won't touch on market cap. Sometimes I could, but according to how I put even dividend yield, the price. So I usually I don't touch on any of this on the descriptive side, on the descriptive tab apart from USA. It's come here, set the country to USA, let it load. But there's only the only problem that there's only one African country. So any other thing that's South Africa, here. So it's only one African country. So let's leave it like that. Fundamentals, there's a limitation here, but work with what is there. But on fundamentals, I just come to low PE ratio. That means it could put in negative PE ratios at some times, but usually I just put the PE ratio to be low. Current ratio just for over 1.5. And then return on assets, I usually leave that. Return on the debt to long-term debt to equity ratio, I usually put under 0.1. Okay, just to get those with very low debt. Price to book value is still subjective. At times I put higher, at times I just leave it. But this is the return on equity. Sorry, I do not forget that. The return on equity over 15. And then from the initial 65 we have, from the initial 10,304 companies, we just, you see, we are on 4. So from 4, let me write this down. From 4, you can see 2 tabs now, 2020, and 4. I usually just choose with avatars. They do change every day. That's one thing to note. But I just come here, look for a company maybe that interests me. Let's say Abbas. Let's say Abbas. Let me see the price earnings. Okay, the price is not, it's too high already. This is a good consideration. American Superconduct Corporation, because it's going down. So I assume if the financials are straight, okay, we could still benefit from this. At 30, you can see the financials are going, the chart price is going down. Then just look at the dividend, estimated data and what. But usually, sometimes I might just sort on industry, because right now I'm not seeing the real estate investment trust that I'm interested in. But usually I sort on industry and I get a rate site. This is the only rate I'm seeing here today. These do change with time. That site is Site Centers Corporation is one. As you know, for rates, they pay monthly dividends. So if this is not paying monthly dividends, then something to question about. But that's an example. So you can see with very little companies, sometimes there's a limitation. I could leave the debt on. I could leave the return on equity on. If there's anything else, maybe I turn off maybe long-term debt. I put it as any. Check it back to any so that I get a larger number, then get a price to verify. I could start using volume, so to price to equity. but you can see this is background incorporation that I can't currently hold. It's also here. That means the debt is high, but the earnings are okay. So you can see just tweaking these filters and come up to your desire, like your desired pricing, and then on from there. Also, you can see the industries. I try to descriptive, try to remove the sector. Yeah. So, consumer, real estate, technology. So you can come and pick whatever you want. If you want financials, touch on financials. We show you 19 financials, insurance companies, T-Row. Ethereum is a good option here. 11 times earnings, American Postal Insurance. It's also a good option. It's okay, but the price is funny for me. Though the earnings and it. So after, let's say I've gotten a company I'm interested in, let's say I put back on preparation. I'll immediately come to dividend.com. Sorry, I already had this organized before. Go to dividend.com. Let's say I want to check back home. KE brings back home, shows me that it has a quarterly dividend frequency, all that to know about, and the dividend dates. So can see it gives you all that information in a nutshell, and you pick it up yourself. As of dividend increase, zero dividend frequency quarterly, and then you go. There are also daily considerations, and such as volume, prices, price movements, and market capitalization. And then the monthly ones are revenue to capitalize the market capitalization itself, like the bond and I'm meaning the stock, the preferred shares capitalization, and then there are also return ratios, the return on assets, return on equity. So it's a little bit subjective and it's according to one's mood or attention. But you could imagine making them stricter, you would have let's say you come also and increase return on assets here. This is what you currently have, and just have it like that. Though the limitation is for local companies now, unfortunately, I have to, and I'm not endorsing them. It's just what I use. The same as dividend.com is just what I use. There's Yahoo Finance, but still I'm subscribed to Yahoo Finance. I could check it out at times, and it could also work as a screener. It could give all this information, but I just prefer this way. I just come to, I don't know, people have their own things. Okay, that now for local companies, the tabs are already open, unfortunately, because I've tried to have them ready so that we work on it quick. But I come to African financials and then search, for example, search for Stanbic. Stanbic, and to bring for me Stanbic Holdings PLC Kenya, Nigeria, and Ghana. So from Uganda, and then check the pricing. Nothing changes much over the time, but you can check the prices. This will be needed later in the variance for the beta calculations. And then if you want to read about the company profile, this pass through it, shown everyone really knows Stanbic. Then come to documents and reports. So documents and reports, this is where now I'll get that. So if the latest document, let's say for example, is for 2025. So if I get the one for 2025, that means I'm getting the one for 2023, since the one for 2025 has all 2025 and 2024 ones. 2023 has 2023 and 2022, the current year and the previous year. So this is the tab it will open, the 2023 financial statement. Then I'll still go to the financial statements, open it up. I don't usually need to download this. Let me first say that. I don't usually need to download this. I just screenshot what I want. Since I'm screen recording, the screenshot won't allow me to come off to screenshot. So I already screenshotted them. I've already even worked on the income statement. And then we now check. So today I'm going to work on Stanbic Bank, not necessarily I'm investing, but just shows you how the time goes, how my time is divided and devoted into what I'll do. So you can imagine performing all I'm going to perform right now. I've already done the income statement. The income statement I'll reverse to show how I did everything, but you can imagine and realizing later that you're not interested after all that you've done and checked out moments before. So you use Mansa markets. So use them. I come and I check the Uganda Securities Exchange website, but for a very short time, because I just get the market performance data. This would be relevant in the calculation of the market return variance when calculating better. So when I'm done with that, okay, let me just open the screenshot. Let me control Z until that we walk through every process. So that's all I did. So this way I stop, but you can see I just took a screenshot of the financial statements that I already had. Select that. Then I just kept on. Then from you have to I lost the count. Yeah, there's a mistake I've made here, but you can see. So I carry the financial statements, carry this data all the way from here, carry to the income statement, and imagine how long that will take. And then just complete this. Might stop in 2022, so I'll not necessarily have to work on the 2021 data, or let me just leave it there. I'll have to edit this still. That's the issue with the Power Query. You work on it and then it does perform. It does misread some commas and makes them into full stops, so the numbers cannot be seen. So this is what I'm doing since the digits have been carried as Control D, Control R. Since the digits have been carried as as in thousands, so I'll have to convert them back into thousands by the thousand denominator, and then just simply carry, okay, Control C, Control Alt V, and then paste those values so that I don't lose nothing. Repeat all this in one minute. So just Control Alt V, page. I column it, then just simply, I don't carry the bold, so you simply carry this, Control Alt V, it's the formats. So, okay, these remain empty, but I think they're all good. So let me just restart it for the balance sheet so that you can see. Let me restart it for the balance sheet so that you can see. So that you can see how it starts. Restart. Your balance sheet just about here. You need this data. So Alt A. Yeah, one from picture. Come down at the bottom here. This is the balance sheet. Okay. This is the sorry, this is the income statement. This is the balance sheet. This is the cash flow statement. So I'll just insert the balance sheet here. Let's prepare. You know, so because the picture size, but you can imagine. Let me review step by step. Accept. Okay, I don't accept this. Sorry, I have to some point use the mouse here. Again, this you can see. So let's just go quickly here. Accept. It looks. We don't have a store for this work, trust me. It's going to be a total waste of your time because you can see it automate the process as much as you want, but there's some things where you still have to. Not like there's no better way, but with time you choose what you want. Literally, before I used to put it in the Power Query, like load the whole document, and then now struggle. This is okay apart from here, and then struggle to update the whole document. Look for the tables, all that, or even connect it to the web. At times I could try to connect it to the website because that PDF is actually a Google Drive link. So you can see out of 53. And there, you have no choice here. Either do it here or do it in for tab. No, or do it cell by cell. There's no limit here. Anyways, because I had to copy the whole financials, screenshot the whole thing before, because I'm screen recording here. The screen record won't allow. The screen record won't allow. Okay, this one is perfect. This isn't. The screen record won't allow me to screenshot again and come and paste the screenshot here. So I had to just place them in before 30 almost there. So anyway, choice. Now it's anyway, you look for the best thing. But when you see guys saying that 9 p.m. and you're still, this is the kind of work that makes people stay there because you don't wish to make any mistakes. And I haven't yet even gone to valuation. This is just on working on data. This is the basics. So you don't wish to make any mistakes here. Just to seem professional. So you can spend your whole night just now imagine this. To be on the safer side, I had to do this. It's 10 a.m. right now, 11:05. I had to do this very early in the morning, but kept on canceling. So imagine, I'll be done here by 12. So if someone asks me, what have you been doing the whole day? My submission is I was working. Okay, okay, yeah. Even if it's okay, let's say someone tells you, "What were you doing today?" I was working on the Stanbic Bank documents, so it's okay. But imagine your boss just tells you, "I told you let's not touch on banking." Yet you clearly saw something in the morning when you are screening for that stuff. So you can imagine your supervisor. Let me say, but since I'm solo, I can spend all this time just working on one by one. Okay, we're almost there. Accept. Okay, accept and then insert the data. Let's just insert it. It's responsible for what? I'm not responsible for nothing. So cash and cash equivalents. Sorry, how didn't I see this? Okay, see, this is what I'm saying now. To physically come here, F2, and update this commerce. It's worth it. Okay, imagine I was doing it for the whole. Let me just copy this. I could be copying some wrong, things, but at the moment, let me just paste them like that. So loans and equivalents to the bank. Sorry, trading assets, financial assets. So there is this foreign tax recoverable. Let's see how is them. Can shift plus shift cells down. So again, loans and can shift plus. Sorry, draw shift plus. What's wrong with me? Shift cells down. Let me pick this. This whole table down and control. I'm spoiling for the other side, but anyway, regardless, control shift plus shift cells down. From this here. And now shift these values a little bit higher. Still edit this. So you can imagine this is the balance sheet. The income statement I had a whole lot to do. Some to change, some Power Query finds them itself. Others you have to come and new struggle like this. Anyway, this why I thought of automating this process. Amounts due from companies. We have a header here, do everything manually. So in this copy cash and cash equivalents, derivative assets, employed assets, and financial investments. So this was okay. Then edit this line by line. investments. How did I carry that? That's sorry. Um, passing. Instead of struggling with that, we just literally carry this on. Sorry. Lines for those on advances customers amounts due. Let's get this. Banks, customers, investment in other subsidiaries, and then other assets. The assets one are allowed to be on and what? Just give me a moment here. Just do control steps. Space this here. This is this virtual I thought I bought. But it won't. Shareholders equity. Pardon me, I'll go back and read the financial statements in a few. Liabilities and derivative current tax deposit from customers, derivative liabilities, current tax liability, okay, deposits from banks, how much due to groups, borrow funds supporting debt, and provisions. So when we carry all of this, I think will fit in here. What am I getting wrong? So, and I still have to verify these numbers. Let me just go quickly here. Anyway, it's going to be a large recording, but let's go and finish this. Okay, let me pause and finish it. Okay, I've put you out of your misery there. Let me just bring us back here and calculate very fast. So, let me see. Equals to minus sum. Let me just run this quickly here. 1000. So this So I'm going to be missing somewhere here. Change this also. So 76 I'm missing here. Let's see what I can take pops. So you can see, anyway, it's still all it is a segment, uh, statement modeling. Let me just copy this. My reference will get me wrong, but minus that. So, so liabilities, you are correct. Let me check. Minus, so liabilities, you are correct. So probabilities, you are correct. Same as, let me just open them up for you since they're on zero. So liabilities, we are correct. And then there's a discrepancy here. Ordinary share account. Let me just delete that. I'm sorry. We need those placeholders there at the moment. Let me just copy this figure. Wow, have we gotten wrong? So we actually need to go to the financial statements for this case. But as you can see, just in the financial statements, no, work in the balance sheet. The balance sheet does have to balance. So let me connect it here again. As you can see, so let me connect total assets, shareholders, liability. So we can see that it does control C, control Alt V. Sorry. So what did I do here? Sorry. Let me see. What happened? Yeah, that's not what I'm going to spend my time on, but they do need to be the same because it is corrected. I also get my figures corrected because that's, I think, more important than fighting with that at the moment. To see the field. It's one for the sake of disgrace. So It's not an ideal position to find yourself in, but I could simply just have all the colors uniform, control one values represent the mouse, yeah, everything. Sorry, what did I do here? I don't even remember. Why I set it to green? Custom in, what did I set it to green? Okay, let me just leave that for a moment, as long as they do balance. But I need to sort out the missing components here, and unfortunately, we'll add 4. I have to get back to the financial statements and check out financial position. I need to look for any digit that has income tax, current income tax, any digit that has how much in it. That has 1,128 in it. 1,128. So all these are there. What am I looking for? 1,028 other assets. 700. Is this in the calculation? Yes, it is. It is in the calculation. So what is missing in the calculation? Goodwill. 0, 512, 59, 17, 28, 128. So this is where I think there's something wrong from. Yes. Yes. This is so you can see. So 20k, where is that 20k? Should come see 128 250 33 033 95 542 839 489 250 033 138 138. So this that's what also actually. So let's alternate 992009 is so I don't know what could I be getting here. There's something I might say. So it's just like 20,000. What else could I be getting in here? This is 1, 2, 3. So, so I think I need to see what ends in 0 here. Yeah, only 1. So this 6. The 9 is still 50 non-current assets. 0, 0, 0. Saturate. I wait for 85. I be having a joint here. So you can see the whole day is just being spent on chasing out the figures, chasing down the figures. Okay, there's something wrong here. Just can't find it right now. So so Power Query is not doing me good. There are figures I'm not finding right here. Let me just copy this. So copy and pasting again. So 19. So this all displaying one minus shift cells left. So then we have this all displaying one 99208 1116 saturate 74 7421 that's saturate 38 that's saturate 97 one yeah that's accurate that's accurate. It's not ideal, it's not ideal, but what can I do? And then first correct. Ready to go. I don't think I'm going to spend my time fighting with the with the cash flow statement. These are placeholders for 2025, yes. So I'm not going to spend my time fighting with the cash flow statement for 2023. But here are some other things I'll pull out. Depreciation. In case some companies list them like here. So, yeah, the depreciation and amortization is listed out here. So it's clean. I can just pick it from there. So for that. So I can just pick them from there and move on. Current ratio on the line, but well indented, I mean. But you can see these are some other aspects I'll just pick from here and perform. These are price movements for June 2025. Let me push them down. Nine pops. I'm not going to waste my time doing that. But since I'm solo, okay, you cannot say that that's not professional. But since solo, I'll just do like that. So let's start on, just for the sake of time and all that, let's start on, sorry, to actually start on the income statements, the financial stub here. So this will be simple. Price to average earnings. What's the price that I've put today? This not a, this is a share price for 18th of the 6th, please. 18th of the 6th. 16 at 6:16 p.m. So I haven't updated it. Okay, let me update it in a few, but it's the price for each news. Get back into the tab here. I need to use average data to get off. It's one. Yeah, then the net worth divided by the shares outstanding. So this why it was important for how converted them shares outstanding total capitalization. So this amount. Owners earnings. I think for now I won't calculate this free cash flow necessarily. I'll just take them from the just take them from I'll just take them from the valuations tab here when I'm doing the DCF. So the capitalization, I don't think that is important for now. So I'll just hide it. Income statement items, this is where the magic. Okay, everything has to be kept dynamic here, or else your risk is the total revenue. So this is 2026, this is 2025 data, the net income, we can go to shareholders, the net profit margin, just go about this. Um, tab, okay, shift tab, have to make it percentage. Critical net income to total capitalization. Again, this is not sorry. This is just going to be removed. The total, the net operating, the operating profit of the seven profits. I should have put the profit margin, but anyway, regardless, we go to income. So you can see this is even useless because it's a bank. No, it's pointless, but sorry, not useless. The operating profit is here divided by is connected to the revenue. So you can see this distortion of in revenue, net revenue. So I use the total income after credit impairments or use this new dot seems one because they are all bank. So control shift percentages. So they are all so these are distorted of sort. So of course if I'm to change the revenue, okay, I should have linked them here, but if I'm to change the revenue to this, let me see, should change the revenue to the initial zone. So I had that there 1000. So you can see how it drops from the 65 to 42. So I think that is more realistic. So yes. So for this case, I just this is D19. Sorry, let me just D19. Let me just do it here. So you can see press F9, F9 to recalculate. I don't know, earnings per share. Just link them still. PS. Let's go. Per share here. That's sorry, say as they are. See our actually 6.98. Okay, perfect. Then value. I don't think I'm interested in that at the moment. Minus assets for common stock, cash asset value, total assets divided by total. Okay, cash asset value. I don't think I'm going to waste my time on that. For assets for equity, it's about the total assets. The total shareholders of the a large one, 9 million. But let's keep it as a multiple, but let's make it. You can see that's pretty healthy. Total assets for common stock. That would just be the total assets divided by the shares outstanding, which is really distorted. Sorry, what to lock the cell. This is from our so pretty good price to earnings. Anyway, this that would have been deleted long time, but since we are working with local companies, I think that data is ours. Sorry, why didn't I go that? Why did I do what's obvious? Just for the sake of having it easy. That was in the this was in the price of 2028. But you can imagine. So six times the earnings per share, but the price is 8 times the average earnings because, as you can see, 8, 9. Okay, one day should be 8, 8, 3. Let me delete it before I leave it there. And 5, 3. So that's just about it. Since the price is then the price to book value, and this is a multiple, you can make it a percentage. It actually also I deleted the book. I deleted the book value. I deleted the book value. It can pick from now. So let me just delete it off. What's the book value? Book value of shareholders' equity for that current year divided by the shares outstanding. Anyway, you can see I'm just using the equity value because I know they know. Because I know there are no preferred shares, so it's nothing like preferred shares here. So to delete from all the book values shareholders equity necessarily. So the price to book value per share go about the value. So can look it as a multiple still. Can look it as a multiple, but the decimals a little realistic. Then the return on equity. So, so everything linked to the data type. So that should I change from the data type net income divided by shareholders equity, term assets. Just give me a moment. Net income divided by total assets. So control R 20 E29 E29. Okay, it's about okay. Control Shift 5. Okay, about okay. Let's make the outage. Outage 0. So repeat it a little bit. Outage 0. We're about good to go, as you can see. As you can see the as you can see the 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 financial tab is done here. I'll make a recommendation. It usually is as simple as creating a conditional format. Go to new rule. Start formatting. That's okay. I can go format. It's a formula to determine it. You have to go to less than or equal to 15% format if the format is green. Or let me just set the font to green. Sorry, I'm using it shouldn't get set the field to very light green and we're good to go. Okay. Make editor room again. E6. So less than 15%. So it's promoted to green. Good to go. Okay. Sorry. How many mistakes am I making right now? Let me get into percent of 15 network shareholders equity. Sorry for that. This will take sale. What should I use? That is skills. Um, green. Oh, yeah. I think that's perfect. Same as this. Get it a bit different here. So you can see it has been becoming great over the years. Means icons for the squares. So it's so see. So earnings per share. Let me just put a color scale. Alt HM data bars. So you see that says about it. Yeah, just put okay, just so that initially the first person who just reads can tell the performance without necessarily questioning. Can just tell the highest F4 is Alt HM. So, okay, I'm gonna try to be fancy. Let me just make it simple. Next to earnings ratio. Also, this one is just supplies color scales, which you can see the price, current price. Actually, this changes the narrative such because the lower the buzz, the better. Yeah, the lower the buzz, the better. So it should be the price to book value, same case. Price to earnings. Okay, here we need to put us to highlight rules, set rules, new rules from has to be greater than or equal to 50%. Then format, if that is the case, is green. Okay, okay. Sorry. So that contains sale value between 15 green. Go back and refresh the other one. The other has to be, let me edit it. It's 15%. Sorry. Hmm. So, um, since there's nothing, since there's actually nothing to apply for this case. Should I make it? Zoom out a little bit and then you see how the company is already performing. It's a bit too light. Colors might not be very new, but that's how the outlook for the company. So the debt to service coverage ratio, but today, let me just highlight the sales roles. Greater than let me stop in lazy Worksheet and data scales. Okay, let me just make a new since they are all less than 15%. The return on earnings isn't that great. Let me just put it to red so you can see at the get go that the return on assets are on the best, not necessarily bad, but just goes to show. So we back out so you can see everything on the set we've done here. Now, coming to the valuation side, let me just fill this in according to how I wish to fill in. So, initially here's how I'll do it on a personal level. So, here's where we come to the hurdle of conventional way to do things, but just to prevent iterative calculations and circularity and make it easy just to perform analysis. Everyone has their own way of doing things. At a point, I usually would stop at the financial stage, but here is just a simple way I would run a DCF. But since this is a bank, I'm even not supposed to be in this tab, but let's go because I have to separate operations from valuations. But here's how I'll simply go. Let me get the figures first. A moment. Equals. So what do we need? We need the total shareholders equity. That is it. We also need the total debt, borrowed funds, and the subordinated debt. Though just do it here. So I've come to notice that borrowed funds have no interest from the Bank of Uganda and other supports, but still they do come that way. So let me first recheck this again. Seeing they have just jumped to 1.8. The borrowed funds and the subordinate debt. I think they're about okay. So this is about okay. All I just necessarily have to do right now is maybe pick figures that are accurate. Control C. I'm sorry. We pick this. Control C. Fn, since this is a del. Alt V. We have no other choice. We go like that. So we go. The total is alt equals. So it's alt equals, and then just briefly divided by the reference, and then pull it down, make them alt h 0. Yeah, so this is how I would necessarily do it. So why have I done like that? To prevent circularity, but these are the weights of equity and the weights of equity and the weights of debt. So I'll pick the weight of equity here. Values just all I need. Pick the weight of debt here. Values as usual is all I need. But the okay. Cost of equity using capital asset mark. Okay, sorry, I didn't put in the values, but let's go like that. Let's go. Just give me a moment. And moment, where am I going to get that? Oh, I forgot to even put in the beta figures. Sorry for that. And then times market return minus the risk return rate. Okay, just give me a moment here. Let me correct everything I've done here. Sorry, come to second brackets. Because that's just about it. So we go. Time to input the return. The market has been sorry, this is the interest rate on the subordinate debt is 4.7. The return on the market has been, this year's an input has been 19.5% over the last years. The beta is, let me link it. The beta is here. Okay, how didn't I link that? Let me paste the values just so. Alt H9, Alt H9. Let's repeat it one more time. Okay, select. Yeah. Okay, it's 7.6 will distort it. Let me just get it back to that. A7, okay, distorts it, but still the risk-free rate, the return on the government ratios has been 15.5%. Anyway, the market return, I could be distorting it of sort, but that's what I put. times that the cost of equity here, I'll necessarily have to use the 4% because the other debt, though I'll put it in the weight, isn't minus a tax rate of 21%. Though I've put it in the rate, it's not necessarily it's not necessarily it's not necessarily dated. The other borrowings from the Bank of Uganda are not necessarily dated, so I have to just sort of use for the subordinate debt alone. Let me link this in a few total debt. That is wrong, but so copy v. Let me copy the formats. We're okay to go. Articles and we're just about it. So back this button. RT. No, sorry. So let me just put back the button. Sorry. Let's put the top and the right border still there. Okay, I shouldn't have thought. So that is the work. Still a hurdle. Hopefully I didn't forget to disconnect this. Yeah. So that's the work. We have the work now trying for the profit. Time for the cash flows, EBITDA growth. How should I do it? EBITDA growth, tax rate, and that. So I'm not going to go through the struggle of this. I think not the struggle, but I will just leave it like that. I'll just use the EBIT and sorry, all this will not be necessarily need control minus shift cells up. So let me see the actuals 2025, 25. Sorry, I'm just doing this manually, but we will do that. 26. So making a whole term there, but the EBIT brought here since this is an actually color is different, but it's the operating profit here. So I can't actually non-interest well. I don't see them paying profit here, but let me just carry this just for the sake of having our values straight. Sorry, the wrong tab. I'm not seeing the interest, the the trading. I don't. So I'm not saying the interest rate they did pay. So let's take that for tax. This isn't a percentage, please. This is that. This isn't a percentage. This is some number. Control Alt. Let me pick my formulas from here. See, Alt V. That's the format. So G of the top order. So we go. The EBIT growth equals this as and based on the formulas. So just a simple corkscrew here. Control C, Control Alt V, paste the formulas. H I we go F4, 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 F4. So something wrong here. Wow, how could I be times kids? So sorry for that. See, hold on. So what am I guessing here? Or they are accurate. It's 1 plus J3. I think that's about accurate. Because, sorry, need to verify this. I'm a little bit exhausted. So why aren't you reflecting it? Yes. Sorry. Um, Let me just go. Brackets 1 plus the interest rate. My brackets. It took for me to correct that, but they do happen. You know, when your mind is exhausted. Let me auto fit this outage. I same as everywhere else. So I think we're now on the accurate side of things. Yeah, I think everything is accurate now. What's the tax rate? The tax rate is 21%. Q1. Okay. This one and then no. My borders. See, I need this to also be blue. I need this to also be blue. And I haven't made them like that at the moment. How does it go? It's the tax rate. Sorry, it's not capturing the borders. Control RV. Formulas. We're good to go. Let me go here. The way it was disturbing me before, I don't wish to have it again disturb me. So, is the unlevered cash flow EBIT? So, EBIT is that. Other current taxes are that. Capital expenditures, I don't think I do need capital expenditures. This is where the reality kicks in for financial statements, but no for banks. Is that necessarily I could get the capital expenditures, but I couldn't get the cash from working capital. As you can see, it's going to take me a while to read all this and find the. That's why I necessarily get the deferred tax assets, the cash from. Okay, I think it's on this and this. Financial investments, I don't know, pledge trading assets at this held for a year. I'm not too sure. I have to go back and read the financial statements again. You have to give me a moment. Advances amounts due are the deferred taxes. So I think I'll only incorporate trading assets, current assets, but they're not necessarily going to be chained all at once. I guess that okay. I usually don't have to have myself hustle like this on, especially now considering that they haven't been identified. But still, capital expenditures. Let me see the differences. Let me see the differences. Capital expenditures for these years. I haven't actually thought of modeling them, so just for the sake of time and sake of everything, I would think I'll leave this blank. Very not okay, like not ideal, but it's what I've chosen to do at the moment. Okay, let me just leave them there as placeholders. As placeholders. Okay. Let's go. This is a placeholder. So only but free cash flow very much distorted, but it is control R, control C, Alt V, control Alt V, control V. This send H O I F4 F4. So let me just click this down here. Okay, the placeholders are going well. Fiscal year is discrete year is 2025. So those have to change. Okay. Terminal growth at 2%. The work. Where did I get this from? And so you can imagine the 13. This distorts the figures a little. But what do I have to lose? I figures doing here for nothing. So we can see the figures go down. F4, sorry, what outage I F4. Let's fit all of this F4, F4, let's fit all of this F4. Okay. Available, available articles. So you can see the terminal value distorts everything. I need to go and check it out again. So terminal growth rate of 2. And what's the terminal? Let me check this out a little bit. F60 minus F59. F60 is F59. So this terminal is too small of sort. So let me just put it at 10. Now, so the terminal is even high at 5. What's more realistic? I know should that. Let me leave them like that. But though the terminal value is too large at the moment, net debt isn't that. Net debt is this. So let's correct this a little bit. Some net debt is some of that. So equals minus 16 shares outstanding are. Let's see what put this. The 5100. So equity value is 256. Current price is. So I'll have to update this current price. So that is the current price minus 1. It's 200 times. The equity value is 200 times the current price. Okay. What do I have here? What do I have? Equity value. Terminal growth. value per share. Let me just fill this in. Divided by something wrong here. Sensitivity models. Sorry, how did I? Populate this percent. Okay, wow. Um, sort of a do here, but this is the sensitivity analysis, and I think it's perfect. Let me just connect the equity, value per share. Just connect this. Shares outstanding. Then your the Milos. Okay, then just check this out. Okay, it's perfect. The premium discount is 84. That was okay. Let me first go and check my math here, but I think people know from how to be best formulas. But as you can see, the terminal growth. No, sorry, the equity value. Let's see the equity value per share. Let's not look at those large numbers. From 284 to 256, from 256 to 258, from 258 to 229, 237, 229, and to 300. It's large, but not too large. Like the sensitivity is not too far off, apart from the 343 to 229, but the range is still so at 76 a share. You can see we are in a good run. But since this is a bank, let me close this moment. Since this is a bank, and GG so since this is a bank, and excuse me here, we need, like you can see, the return. You can see here, so I didn't put it in. Okay, and I didn't have to skip this, but I had to put in the working capital implications and the capex. But since I know this is a bank, I necessarily just can't skip it. Not advised to do so, but not advised to do so, but I first. That is over data table. What today table down here, so we just delete like that. But okay, since this is a bank, normal bank valuation would be net asset value and the residual income. Residual income is what I would recommend and what I think, okay, to my judgment, is what I feel is right. So if I'm to check just the current if I'm to check the link the assets, the total assets, we link here, then we link, sorry, there were inputs there before, so total liabilities, so the implicated equity is, let's see if equals, this one is equal to, see, just we have that number right. It's true, so we have it right. So the shares outstanding will be, pick them from here, equals to shares outstanding, 43. Also, this is, anyway, for the sake of time, I have just copied what I had in my previous analysis. I've just carried it here. This, yeah, that's perfect. So for the sake of time, in my previous analysis, this is what I carried. In 2025 book value, just have to link them up, the two, this, that is the 2025 book value. The cost of equity has still be linked. The cost of equity here is based, because, so I could just link it back up here. I'll just click that is F13. F13, let me link it also here, because it will copy it across. So you can see the figures get alive. I've messed up the borders here, but just for the sake of time, I'll leave everything like this. So from here, if you have terminal, for that, this case, the terminal is always lower. Book value takes up everything. So you can see the price using the equity level is 53. I think that's what we carry. The financial stock. Sorry. See, testing values only. Then for the discounted cash flow, let's go back. You can see on the background, this sensitivity analysis gave me some weird time. Not like, oh, sorry, what does it? So this sensitivity analysis, someone can look at it as easy, but it would have, because these were placeholders before, as I told you. So I'm here busy checking my model, yet some of these labels were inaccurate. And that's by the way. So current equity value, um, build out the charts. I already have the revenue charts built out. This one, actually, get something more accurate. So little accurate, just connect this back. Price to average earnings. There we go. What did happen here? Divided by the average of what, and especially when just people from the center. I wouldn't necessarily do that, but I should go to, oh, let me just go to the data tab. So that should anything change on the data here, at least everything stays dynamic. 8.5, so all that connected. Value per share, 6 price to earnings, 6.64 price to book value. That's 1.6 times book value. It doesn't matter since it's a bank, but something to watch out for. Then let me center this. Center. Let's see. Margin center. Voltage. MA. Sorry. Voltage. C. Let me indent. So many problem. 6. 6, 6, 6, 6. 12, 0. So, reduce the decimals here. So, this also, and I think we're good to go. Even investment thesis, that one for that. Okay, investment thesis. I think we are good to go. I'll write a simple thesis, but that's how everything goes. So this a normal day. It's now 3:27 p.m. Considering my timing, it's something that should have taken me 2 hours, but it has ended up taking me almost 4 hours now, and we're good to go. Final, which I don't wish to take time on, is just normal F5 Alt S, and then select constants. I don't want numbers. I don't want text. I mean, that's about it. All that selected. Alt H. FC. The font is below. Okay, that's okay. Oh, sorry. F5 Alt S. Now need does text. So we don't need text. That's about it. Alt H. Let's see. Black. So we have everything formatted the way we should be. Not changing our labels black. So everything's about okay. Everything looks okay to my observation. Just maybe later need to expand on this unlevered free cash flow since the model is as good as its inputs. As we could see, the sensitivity analysis needs to be reviewed And anyway, these figures aren't necessarily, it's about okay. These figures aren't necessarily formatted right. Let's see. Yes, president. Check this out. Okay, all the figures are about right. So this is just a normal day. Done a lot of wrong, but everything comes out to this. So imagine going through all this just to find out that you aren't interested in the company for example and all that. Speaking of comps, okay, charts. Let's first work on the charts. I only made this revenue chart. It looks okay. I don't think there's anything wrong. I'll usually make a profit margin chart, a price to earnings trend just to watch it, and an earnings per share trend. At similar charts, but I just have them there for anyone who looks at the first one. Let me get like that. Yeah, it shows you. So these are other important cases also. Can see how much time you'll spend on formatting and using the format. So this for this case now, since this is a bank, again, this is where I will make the decision from, not even anywhere else. Speaking of industry comparison, this is where company the comps valuation comes in, and then the president transactions. I usually skip this for the reality, but if the screener showed me very close companies, I would actually spend another 2 hours here building the other company and comparing the cases I want. So most times I'll just leave the case, and these holdings are usually where I leave the case. Like these holdings are where I leave it and let it go from me. Then now just close the model. Should I feel like I'm done and leave it at this tab? The investment thesis isn't written. I usually leave it at this tab and leave everything like this. Everything builds out itself. So for the price charts, as you can see, the price charts, they're manuals. I don't like that. I don't like the fact that I have to produce everything. But that's all. So I end with formatting considerations and then leave it here. Leave it here at the company profile, and you'll ask, okay, so someone will spend the whole day doing this, just going through work. It's yes, you can attest that it's not simple, but it's you cannot even me too, I cannot tell how it matters most, but when you preserve your wealth and everything goes well, that's when you know how someone who did wasted their 3 hours every single day in a spreadsheet like this will make a difference in your life. So that's just about it. Garbage in of sort and garbage out. Assumptions are subject to our inputs, but that's how I'll spend my whole day, and that's how the time goes most times.